One of the most confusing parts about this unit for students is filling out the tables that track the cost of goods sold and all of the layers in inventory. And in your homework, you're going to see a table similar to this, where it has date and then it has purchases, cost of goods sold, inventory on hand. So let's just run through some examples of how this is filled out. So first of all, let's say we are looking at August 1st. And on August 1st, we have our beginning inventory. So we haven't purchased something, we haven't sold something. It's just what do we already have in the store? And we have 2 units in the store, and they both cost $350. And so our total cost right now is $700. Yeah, let's just do it that way. So it has $700 is our total cost. On August 5th, then we made a purchase and we bought 4 and we paid $360 for them for a total of $1,440. We haven't sold anything, so we still leave this cost of goods sold column blank, but we have to update our inventory on hand. Now we have 2 different layers, meaning that we still have the 2 at $350 for $700, and we have the 4 at $360 for $1,440. So each line over here on the inventory on hand side, it tracks how much we have in inventory at each price and which order we bought them in. So what this is saying over here is we have 2 at $350 for $700, and then we bought, so the newer ones are 4 of them at $360 for $1,440. We could add those 2 together for a total of $2,140 is our total inventory on hand. All right, on the 15th, we make a sale. We sold 4. Now, so let's just say we sold 4. This table does not track what our customer paid. We have to get that from some other place, and that's not in this problem. All this table is trying to help us figure out is how much it cost us. What goes in that cost of goods sold journal entry? That first journal entry, what the customer paid, we don't know that from this table. You have to get that from somewhere else. We sold 4 things though. So we sold 4 units. And if we are using FIFO, which 4 did we sell? If we are using first in, first out, we go to our oldest ones. So this number 2, we sold those 2. So we sold 2 at $350, and that was $700. And if we sold a total of 4, well, that 2 doesn't cover it, so we must go to the next layer, and we sold 2 of these. So 2 of the $360 ones, and that cost us $720. So the 2 together, what would go in our cost of goods sold journal entry? That's $1,420 as the total. So now we update our inventory on hand. What do we have left? Well, we had 6. We sold 4 of them, so we must have 2 left. Which 2 do we have left? Well, we sold these ones, so those ones are gone. And we sold 2 of these, but those are the 2 that are left. So those each cost $360. So what do we have left in inventory is $720. All right, we make another purchase on the 26th of August. We bought 12. So we bought 12, and they each cost us $380. So the total is $4,560. This was a purchase, so we're going to skip all the cost of goods sold columns, and we're just going to update our inventory. We still have these 2 at $360. Those are now our oldest ones, so let's put that over here. 2 at 360 for a total of 720. But we also have 12 at 380, which is a total of 4,560. And the total of those two combined is 5,280. All right, next line is on the 31st, we make one more sale this month. We sold 10. So we sold 10 units. If we are using FIFO, which 10 did we sell? Well, we go to our oldest layer first. We must have sold those two plus 8 of these ones. So 2 at 360 and 8 of them at 380. So the 2 at 360 was 720. And then the 8 at 380 was 3,040 for a total, again, this is what we're looking for the journal entry, was 3,760. Now we have to update again our inventory and hand column for what do we have left. Well, the 2 at 360, they are gone. So those ones are completely gone. We sold 8 of these 12, so we have 4 of those left at 380, and that equals 1,520 is what we have left. Okay, so at the end of the month, when we're putting together our our financial statements, we'll do a total column here just to make sure that all of our numbers match as they're supposed to. I want to emphasize that the numbers we need for journal entries are the 1420 and the 3,760. So that's what goes in the cost of goods sold journal entry. And that's really what this table is trying to figure out for us, is what do we put in that space in the journal entry for cost of goods sold. Just the totals that we need here, we spent $6,000 on inventory. That's going to be the same no matter which cost flow assumption we use. Whether we use FIFO or LIFO, that doesn't change what we actually paid our suppliers. So the $6,000, it's going to be the same no matter which cost flow assumption we use. The two numbers, though, that will be different are the cost of goods sold. 5,180 is the total here. So that's 1,420 plus 3,760. And then what do we have in inventory? A common mistake that students make is they total up this one, which is correct. So they total up this column, and then they assume that you also total up this column over here. This is a running total. The inventory on hand is a running total, kind of like the balance in the ledger account that we're used to. And so the question we're answering is, what is left in inventory? Well, it's the same as what we calculated on the last row. We have 1,520 in inventory. All right, so that is FIFO. Let's do the same thing, but under LIFO. How does this change? Let's see. I need an eraser here. Here we go. And the only thing that changes is the cost of goods sold. And so when we make a sale. What doesn't change is when we make a purchase. So let's run through this scenario again using LIFO. We start off on August 1st. Same thing as before. We have 2 units. They cost us $350, and the total cost was $700. And then we make a purchase on August 5th. 4 units at $360, and the total cost was $1,440. And now we have 2 layers in inventory. Our oldest one is the 2 at $350, and the newer one is 4 at $360 for $1,440. and that is a total of 2,140. Let's stop here and compare this to FIFO. So right now, notice that we have the 2,140 over here. That is still the same. Again, the only difference comes when we are selling things. So we're going to do our first sale now, and that's on the 15th. And we sold 4. So if you recall, we sold 4 on the 15th. If we are using LIFO, last in, first out, which 4 did we sell? Well, we start at our newest items and then move towards our oldest. We have 4 newest items. Hey, that covers the 4 that we sold. So the 4 that we sold were these oldest ones, or sorry, the newest ones. So we sold 4. They cost us $360 for a total of $1,440. This $1,440, that's what goes in the cost of goods sold journal entry. As opposed to, under FIFO, we calculated it at 1,420 because with that one, we are starting with our oldest and going to the newest. LIFO is going from the newest towards the oldest. All right, after we make the sale and the journal entries, let's update the inventory that we have on hand. So we sold these 4. So those ones are gone. The 2 that we have left are still the old ones. Those ones are still there, and those are worth $700. On the 26th, we purchased 12 more. And again, this does not really change the journal entry. FIFO and LIFO is going to be the same journal entry. It doesn't change that. No matter what the cost flow assumption we're using, we're still paying $4,560 to our supplier. That hasn't changed. Our supplier doesn't care if we're using FIFO or LIFO. They just want their money. All right, so let's update now our inventory on hand. We still have these 2, so let's put those first. Those are the oldest ones. But now we have 12 at $380 for $5,260. So adding those to the 5,260 is the total. The 4,560 is that layer, and the total of those 2 is 5,260. So we have a total of 5,260 in inventory. Let's compare that to FIFO at this point. FIFO, we said we have 5,280 in inventory after making that purchase. That's because we sold those cheap ones, the oldest ones. Whereas LIFO, we're still assumed to have the 2 oldest ones. So that's why it's slightly different now. It's what we have sold. The assumption is different. All right, again, one more sale on August 31st. We sold 10 things. And which 10 did we sell? Again, doing LIFO, we start with our newest ones. We sold 10 of these ones. 10 at $380 for $3,800 is what would go in the journal entry. Again, let's update now what we have on hand for inventory. We still have these 2 old ones. Those ones weren't sold. Those are still there. And we have, since we sold 10 of these, we have 2 of those left. So we have 700 and 760 for a total of 1,460. All right, so let's do our totals now. We still spent $6,000 on purchases. Again, that doesn't change between LIFO and FIFO. What has changed, though, is our cost of goods sold, $5,240, and our ending inventory, which is $1,460. Now, if we add these 2 together, I'm just going to do some quick math. Our total of cost of goods sold is 6,700. Let's compare that to the total on FIFO. Hey, guess what? If you do the math, it's exactly the same, 6,700. So as long as your beginning inventory is the same between the two, which in this situation it was, the total of cost of goods sold and ending inventory should be the same as well. All right, so also another thing to point out here, we said in another video that FIFO gives us the lowest cost of goods sold and the highest highest net income. Does that hold true here? At least in times of rising prices, which this example it was. 5,180 for cost of goods sold under FIFO, 5,240 for cost of goods sold under LIFO. Indeed, it does hold true here because the prices were rising over time. All right, so that's the difference between FIFO and LIFO. In another video, we'll get to weighted average.